All right, guys. Thank you for sharing your time with us tonight. So, welcome to our tax information night. Earn yourself a tax break by starting a home-based business by our very own chartered accountant Kevin Shiv. So, just a little bit about Kevin. He's a chartered accountant and he owns his own firm. He's the director of this firm, CWK Accountants. He has helped a lot of business entrepreneurs, self-employed people, and many other people in the different walks of life and sort their financials and was able to help them with their financials as well. So what I love about them guys is that he was able to help a lot of people as well to come up with their first home here in New Zealand. So really guys, if you're a resident or work to resident WTR or you're a citizen and you want information about tax, this is the best information that you really could wanted to look at. Or if you're a person who owns a home, and you wanted to know on how to get some make some tax deductibles, guys, you should not miss this out. And without further ado, guys, I'm gonna give it to you to Kevin. So welcome, Kevin. Thank you for coming today and sharing your knowledge and experience. And how can we leverage tax by starting a home-based business? Take it away, Kevin.
Thank you, Van. Thank you, everyone, for attending this tax information evening today. I would like to welcome everyone to this evening, and I will be providing information about the advantage of having a home-based business, especially choosing the company that you want to work with is very important. I believe LifeVantage is a great company that would help you to earn extra income, while at the same time will be able to add that extra income for you to buy your dream home, your first home. Van, would you please put up the PowerPoint slide?
Yeah, it's on. Can you
It's
see
on
it?
now.
Yeah, it's on now. Yeah.
Okay, sure. So first of all, there are 4 advantages of having a home-based business, which we call a tax break for home-based business. The first one is the ability to earn extra income, depending on how you allocate your time. You have the freedom of whether how many hours you put in and how much you want to earn. You could even make it either part-time or full-time for this business. So the income that you bring in, the extra income that you bring in, will supplement your full-time day job, that will help you save for that deposit to get into that first home. And CWK Accountant has experience in helping you out, preparing the accounts and getting you that approval for your first home. Should you want to get more information about how to get that approval, you can book in a free information session on either on Zoom or either come to our office at Manukau, at Unit 65 Jack Conway Avenue, Manukau. The second advantage of having a home-based business is the ability to claim full deductible expenses to reduce the income that you earn from your daytime job as well as your home-based business. The third one is the ability to claim and convert the expenses that would otherwise be your private expenses, without the ability to claim tax, into a legitimate business expenses. So once you start your business with LifeVantage, you would be able to classify as an independent contractor or a self-employed person. That would open up the possibilities, the opportunity to a whole lot of deductible expenses that can reduce your tax. and in some instances claim a tax refund back from your PAYE that you have paid to IRD over time for your daytime job. Now, the fourth one is the ability to claim losses against wages and salary income for your daytime job. If you run LifeVantage just part-time, you can claim those expenses. If it's resulted in losses, then you would have the ability to get a refund from Inland Revenue for the tax that you have already paid out through your PAYE daytime job. Now we move on to the second page of the PowerPoint slide. So I'm going to talk about the first bullet point, the ability to earn extra income on top of your daytime job to get into your first home. So for example, if you work full-time and you need a boost of income to get a mortgage approval for your first home, the home business like LifeVantage would be at a great advantage, would be one that present no risk to you at all because you have no overhead costs. You run it entirely online from your convenience or from your home, which is very suitable for the current situation, given what we have experienced so far about the COVID-19 situation. And online business is thriving and is increasing. So you could convert your private expenses into legitimate business expenses in order to reduce your tax that you have already paid through PAYE. If you work part-time and you could do LifeVantage full-time, that's also great because you could quickly build up your LifeVantage business, earn a huge income from LifeVantage, just like what Van is earning now. He's Elite Pro 7 and earning a huge amount of income per month. So with the full potential of the income that you earn from LifeVantage, you would be having the ability to get a mortgage for your first home as well. So regardless whether you work full-time, supplement part-time income from LifeVantage, or you work part-time and then you do your LifeVantage business full-time, you open up yourself to a lot of opportunities of tax deductible expenses, as well as getting into that first home, saving for that deposit. Now we move on to the third slide of our presentation, the ability to claim full deductible expenses in order to reduce the income earned from home business. Now, to qualify as a self-employed person, there are two things that you need to satisfy in terms of, from the perspective of Inland Revenue. You have to have the purpose and intentions of being in the business. It doesn't mean that you have to generate a profit. It could be a loss, it could be a profit. But you must satisfy those two requirements by having the intention to be in the business and having the purpose of doing the business. Now, to satisfy those two important tests of being a self-employed person, you must qualify. You must qualify by earning consistently 200 PV per month from your LifeVantage business, which means that's your spending, either through selling products to your customers, who is potentially will become your downline, or you can purchase it yourself for your consumptions, provided you meet the minimum 200 PV per month. And you must regularly attending the business seminars. So that will satisfy the purpose, having a purpose of being in business. So you must consistently attending business seminars to show business activities, have a records of meetings, and prove the purpose of intentions of being in business. It doesn't matter you make loss or you make profit. It's not a concern about IRD. The inland revenue will only be concerned about the purpose and intention. If you satisfy those two, then you qualified yourself as a self-employed business owner through LifeVantage, and you will be opening yourself to an opportunity for full deductible expenses from your daily expenses. You will be able to claim many daily expenses from your LifeVantage extra income. Next, we move on to the next slide. The ability to claim and convert expenses into legitimate business expenses. Now, for example, if you just a full-time employee without LifeVantage home business, so your status is not a self-employed person, therefore you won't be able to claim any expenses at all against your income. What you earn from your daytime job will be the gross pay, deduct the PAYE, and the net pay. That's it. You won't even be able to claim the petrol expenses that you incur on a daily basis for your travel costs, for your coffee. So those expenses you won't be able to convert into claimable deductible expenses because you don't have a business. For example, like other expenses that you incur, like rental for your house, or your mortgage payment for your house, your power bill, your rates, your renovation, your furniture, your telephone, your travel costs, your petrol, your accommodation, your restaurant bills, your coffee, the gift that you give it to your family and friends. Those expenses, once you join LifeVantage and maintain that 200 PV and consistently show business activities, you would be able to claim those massive expenses and work to your advantage. So those expenses you can use to offset again your income from your daytime job, as well as offset again the income that you earn from LifeVantage. Effectively, whatever you earn from LifeVantage will be your income, but you have the ability to utilize and convert those expenses to reduce the income. In some instances, you may be able to claim the tax refund back from inland revenue in case that after you compile your financial statements, it show some losses that you can utilize to offset against your income. Ability to claim losses against wages and salary income to get tax refund. For example, we've got a scenario of a person working full-time and doing part-time LifeVantage. If you work full-time and do a LifeVantage part-time, you will be able you're probably in a loss position because you've got more expenses than your income. Now, you can bring those losses to offsets against your income and claim a tax refund back from inland revenue at the end of the year by filing the IR3 returns, individual income tax returns, as a self-employed person, provided you satisfy the definition of a self-employed person by having a purpose and intentions to maintain a business, regardless whether it's making losses or income. Effectively, you will earn something from LifeVantage. It's up to it's whether a small amount or large amount, it depending on how much effort you put in and how much income you earn. But in the book, we can actually show losses because you can claim so much expenses just because your status as a self-employed person, and bring back those losses into the business, into the daytime job income. I will give you an example shortly. For example, let's say you are on a $50,000 wages and salary, $50,000 average salary per year, per annum. Let's say probably you are a teacher, or let's say probably you are nurses just starting out your career, for example. You work for the hospital full time and you earn $50,000 starting salaries. Now, you would be paying $8,020 in taxes to the Inland Revenue Department, to the IRD, through your weekly PAYE deduction. You wouldn't even see that deducted, that money, because it's pre-deducted from your wages and salary. You would probably only see the net pay that coming into your bank account. You probably can see that from your payslip, and for a total of 12 months, it would accumulate to be $8,020. Now, assuming that you're doing LifeVantage part-time, you probably earn, let's say, $1,000, or maybe, let's say, $1,000 per month from LifeVantage, which work out to be about $12,000 per year extra income from part-time being a business owner independent business owner in LifeVantage. Your 12,000 probably not being able to cover your personal expenses. Your personal expenses does not change. Your spending does not have to be changed. What happened is those expenses that used to be your private expenses will now become your business expenses that you can utilize it to offsets against your LifeVantage income. So you earn $12,000 from LifeVantage, but you'll probably convert those expenses. Let's say if you set up a home office, you utilize your living room to run the business. Whatever in that living room, for example, the TV, the couch, the furniture, that area that you designate to be a business use, you measure how many square meter it is. And then let's say you have another meeting room in your house where you will meet potential LifeVantage downline. You then measure how many square meters of that room as well. Let's assume that it's about, let's say, 50 square meters that you use for business, and the house is 200 square meters. So that will be 25% of your total floor area used for business purpose. All the expenses that relate to the house, including if you are renting, that will be 25% of the rent will be business expenses. 25% of your power bill will be business expenses, telephone, rates. If you happen to repaint the house, that will be 25% as well. So all expenses, household expenses, 25% of them qualify as a business expense that you can bring in to deduct against your LifeVantage home business income. Now, not only that, since you set up your home office, that means the home office become your workplace. The moment you leave your house, traveling to meet prospective in a cafe, that will be your expenses as well, your fuel costs. Now, you use your car for your business. Let's say it's a $10,000 car. You will have the ability, let's say you use it maybe 50% for your private use to go to work every day, and another 50%. You can do a logbook for 3 months to split the percentage of business use and private use. Whenever you go out for business purpose, you record it. And let's say it comes to 50%. So that means 50% of the fuel expenses will be deductible expenses. Let's say you spend $100 per week on fuel. Now $50 of that will become your business expense now. Let's say normally you go for coffee, you can't deduct it, but what you need is just keep the coffee receipt and write at the back that you may have met some prospective client downline, so you can claim 50% entertainment expense. Even if you go to restaurant, keep the receipt and write what purpose. As long as it's for business purpose, you can claim that against your LifeVantage income. Let's say with all those deductible expenses, we said, welcome to the world of deductible expenses. It's a whole lot of expenses that you can claim against your LifeVantage income. Let's say you rack up all those expenses that are qualified as business expenses, and it turned out to be $30,000 per year. But your income for the first year from LifeVantage is only $12,000. So that means another $18,000 loss from your LifeVantage business. Let's say for simplicity, you made a loss. You earn $10,000 from LifeVantage, but your expenses claim is $20,000, including depreciation on car. You can claim 30% depreciation on your car per year, and 50% of that will be deductible if the percentage of business use is 50%. If you do LifeVantage full time, then you may probably qualify to claim up to 100% if you have another vehicle just for private use and use LifeVantage car for the business purpose fully. So for the sake of simplicity here, you earn $10,000 from LifeVantage in first year, and then your expenses that would otherwise be your normal lifestyle expenses can now be converted into business expenses, which is $20,000. Your rent, your power bill, your petrol, especially your car depreciation, your coffee, going out the restaurant, the gift that you give to your friends, family, that could be a gift for marketing purpose. So $10,000 loss. You're earning $50,000, and you have already paid $8,020 in PAYE. That money has gone already to IRD. Now, after we compile the financial statements of your LifeVantage business, you made a loss of $10,000. Then we will file your IR3 individual's tax returns with a loss of $10,000 to offset against your daytime job income of $50,000. Now your final taxable income will be reduced by $10,000. It will now be $40,000. We move on to the next slides. So with $40,000 final taxable income, the tax that you should be paying to Inland Revenue would have been $6,020. So in this case, you have already paid to IRD through your PAYE daytime job of $8,020. And we file the IR3, your final tax should have only been $6,000 because of that $10,000 loss for the first year in business. You will get a refund of $2,000 income tax refund from Inland Revenue. So you see how it works to your advantage. You can claim those $2,000, and that $2,000 you can put forward into your further savings. When actual fact, the effective earning, the actual earning does not change. You still have $12,000 from LifeVantage, let's say $10,000 from LifeVantage. It wasn't a loss, it was an income. But for tax purposes, we are able to legitimately make it into a loss. And then you get an extra $2K from Inland Revenue. So that's become $12K into your savings for your first home. Now, because during your daytime job, you also save up for KiwiSaver as well, I would recommend you to up your KiwiSaver, because you can up it up to 8% maximum if your employer is allowable and they contribute more. And then after 3 years of being a member, you can take it all out for your first home deposit. On top of that, the government has a policy. The first home buyer, on top of that, the government has a policy for first home grants that if you are alone and earning income less than $130,000, they will give you if you are alone and you're earning $90,000, no more than $90,000, the government will provide you with $10,000 home start grant. But as a couple, if your earning is less than 135K, you are able each to be able to claim $10,000 each. So plus the Kiwi Saver and plus the amount of money that you have saved over time from LifeVantage. I understand that LifeVantage has a very generous compensation structure, and also a very low PV to maintain. Van could guide you through how to lower your expenses by selling products and still maintain your 200 PV. So among all the network marketing that I have come across, LifeVantage has a very, very good, generous compensation structures and a very minimal spending to maintain your PV in order to move your business forward. So as you can see that in actual fact, you are making $10,000, but from the tax perspective, because of the tax rules in anywhere in the world, including the United States, Australia, New Zealand, or the Western world, they are all work in the advantage of business and self-employed people. The only reason is that they want to encourage more businesses, so business can thrive and grow and employ more people and get the economy going. And therefore, the structure, the environment that they introduce in terms of tax rules, it works to the advantage of self-employed people like us. So you should take advantage of that, being a home business owner without any overhead costs. And it costs nothing to run it from your convenience of your home, as well as running it online. It's very, very convenient and very workable, and with minimal risk and a whole lot of tax advantage. So the next page, as I show you, so the tax refund would be $2,000 in this case, and the number will run bigger if your income is higher and the tax losses is more. Next page is the rank of the earning from LifeVantage. You may have seen this before. LifeVantage has got the ranking from Pro 1 to Pro 11, and this amount of earning, average pay or earning per month, is in US dollars. So it is achievable, and I believe that Van would provide you with more information on how to achieve those earnings and how to build up your business and maintain the PV, alongside having the advantage of tax advantage. So in terms of getting into first home, if you're stuck with a low, like you don't, what happens if you don't have deposits? You can always pull together as a team to syndicate. We call it syndicating, which means that people pull together, like become partnership in buying the property. Let's say you've got only $10,000 and you want to buy a $700,000 home, for example. Maybe you get together 7 people and each contribute 10,000. It becomes 70,000. and then you each will all have payslip, combined together income. That would be sufficient to get into a house. And once the house increase, you can sell that house and get back your deposit and buy individually later on. If you want to get onto property ladders, so that's one of the options to syndicating, combine together. You can do this with your family and friend, or you can do this with your fellow LifeVantage business owner, or even your colleague at work, to achieve the dream of earning home. Because the partnership will spell out the share very clearly, how many percentage you own, and it's all done through lawyer, plus your name will be on title, creating a trust together. So that would be an options if you want to achieve home ownership. And I'm very specialized in setting up trust and getting mortgage approval and helping you out to get onto your first home, and tackling on both sides of the deposit side and the income side. I have solutions for both. So if you really want to get into a home, please contact me for free information. You can have a free 30-minute consultation at my office, or give me a call anytime, or request a Zoom meeting. You're welcome. Being a LifeVantage family member, you're welcome anytime to contact me. My contact details is on the last page of this slide. And now it's time that I would like to take any questions from you. If you have any questions, feel free to ask. I'll give you the answers.
Awesome. Thanks, Kevin. Really appreciate that knowledge and experience over there. Just a quick question. How long have you been in an industry being an accountant for?
Yes, I started my career since 2007 after graduating from AUT, and then I worked for a large insurance company called AIA. It's a subsidiary of AIG, and I stayed there for 3 years before moving on to a chartered accountancy firm, and then complete my chartered accountants locally in New Zealand. So I've been practicing for over 10 years now.
Wow, that's amazing. That's amazing. So not many accountants know how to claim some tax advantages using network marketing business, right? So have you been working with other companies as well?
Yes, I've been looking after accounts for some of the IBO from Amway, and some of my clients maybe from Usana as well. But I could tell you that LifeVantage Compensation Plan is very generous.
Awesome. Yeah, actually, I did my financials, guys, through Kevin, and he was so surprised. And he asked me, "What? Did you just earn this in 1 year?" I was like, "Yeah," and I'm doing it part time. And he said, "Yeah, I have another client who's been doing it 3 years, but you earn more than her, but she's doing it like full time, running around Auckland." So I was like, "You better check it out." Then so he asked me about it, and there you go, guys. So I told him, "Can we add value to our team?" Because since that he knows experience about accounting, especially with network marketing, and we could really fully take so much tax advantages over here, guys. So, and I think Kevin is doing a good deal for us as a LifeVantage family, and Kevin is loving the products. How long have you been taking our products too, Kevin?
I have been taking the products for more than a month now. That's great.
Awesome. See, there you go. and yeah, and also his partner is also loving the products and really felt some good benefits, guys. So now I'm opening the floor for question and answer, guys. I know this is so much to you, Kevin. I know you only give 30-minute free session, but we went over the line. But guys, do you have any questions? I've ask all to unmute. So I ask everyone to unmute. If you guys have any questions, just throw it away.
Yes, I have a question. First of all, thank you, man. Thank you, Kevin. That was fantastic. presentation, and actually thank you for putting it on, because I know there's a lot of networkers out there, they're not treating this as a business. They don't realize, because everyone thinks that if you spend a lot of money on a business, like $10,000 and over on a business, that's a real business. But they don't realize that even spending, under a couple of $100 is a real business. It's a you have the potential to earn unlimited income. It's really hard for people because it's a different way of doing business, and so it's a lot of people are still trying to learn about network marketing. So, it's really encouraging people to understand, what they got in their hands, and that it's tax deductible, a lot of the stuff, just what Kevin was talking about. What I wanted to, and you do get a lot of tax savings back as well, and I know that for a fact. And now, what I wanted to know was, when do you decide to change it to a business? So that it's a complete separate entity from yourself, like instead of, to set up a company and have it generating as, through a company entity rather than as a self-employed. When do you know to? Because I noticed that with some people, some networkers, they set up a business and have their network marketing business operating as a company, through a company. So when do you do that? When do you decide to do that? Or is there a certain income that you need to, generating from your business before you do that? Or I wanted to know.
Yes, I guess when your income hit over 60K per year, ideally you could register a company and take it further by promoting further and having more downline, more of a structural business, having regular seminars, get-togethers, and you probably, by that time, you probably want to do some formal budgeting. For example, like spending 4% on marketing, and take advantage of arranging events, even at a larger scale, maybe like at an event center. So there are successful examples of network marketing out there that people can start by doing a live webinars or doing a live show from their home about the products, using their home as a showroom.
Yep.
But they can also, when you have more downlines, when you want to be formalize your structure, let's say you may organize some events in a hotel, a 5-star hotel. Let's say if you work yourself up to the top level and get hundreds of followers, you may organize a quarterly get-together or a monthly get-together in a large format events, and probably invite new people to come in to see for themselves, to celebrate success, or even within among your team, that you can organize some motivational evening by giving out some awards yourself, or something to encourage people, or some training session.
Yeah.
So if you go over $60,000, you start register for GST.
Yeah.
And then yes, and then you can work yourself out further.
Oh, okay. That was my next question. Registering for GST.
Yes.
Yeah. So it's 60,000, is it? You have to.
Yes, that's
60,000.
right.
Yeah.
60,000.
Okay. All right. That's cool.
Awesome.
Thank you.
Thanks, Maggie. Thanks,
Thank
Kevin.
you.
Any more, guys?
I've got a question, Van.
Yeah. Hi, Cheryl. Yes.
Hey.
Awesome. Take it
Hi,
away.
Cheryl.
Hey, Kevin. Do you have a template that we could have to, maybe put our running costs in? You're saying if you go out for lunch or something, to actually record that as we go through the year rather than having this just big pile of receipts at the end?
Yes, I do have a template in Excel format where you could record categorize your expenses, more like a worksheets.
Yeah.
But you do have to maintain your tax invoice for the purpose of claiming the expenses. Preferably, even if you lost some receipt, but if you spend it through your bank account, your business card, just keep one account separate for business purpose and run through all the expenses through that bank account where you get the income from LifeVantage. Then ideally you'll be able to claim those expenses even in some circumstances that you lost the receipts, but preferably if you could keep the receipts. And I believe that Xero's software sometime at some stage when you have a regular good income, we may put you onto Xero, where you can just snap your receipt and upload it without having to keep them. And then the software itself will have the artificial intelligence component where they can capture the amount and do self-data entry into the system. But for a start, we may give you some spreadsheets to maintain all those bookkeeping.
Yeah,
You can
and
just
also,
input the figures.
yeah, and give us an idea of what kind of things that we can claim, you know, what expenses we can claim.
That's right. Yes, that's right. As I mentioned, you may convert those household expenses once you set up your home office and your showroom for your to broadcast live selling the products or a Zoom meeting with your team member. And we have a template where for the home office expenses claim. Your motor vehicle, we have a template of the logbook where you input all the kilometers that you travel for your business purposes, and the worksheets that maintain all your daily bookkeeping.
Yeah, that would be great.
So you'll send us that stuff, Kevin. So you're gonna help us, you know, organize and put it in a maybe PDF file and send us your Excel sheet. So then we could just log in over there and stuff. Isn't that right?
Yes, that's right. Yes, that's right.
It's gonna make your job easier too, right?
Yes, that's right. Yes. And for all members of LifeVantage, I have come to produce a special package, special accounting package for LifeVantage family members. I'm only charging $500 plus GST per year to do the account work. So that's a price that is very affordable for everyone.
And not just that, Kevin. So you'll be doing us some you know some training session nights as well, so we could be held accountable with our accounting, and you know, so there's so much value, guys. 500 plus GST plus training session nights, and you know, question and answers. Yeah. So we have an sorry guys, but we're running about of time, so I'm gonna get Jenny ask one. But if you've missed Kevin's contact details, his contact details are over here. Jen, sorry, I'm just gonna promote this. Please take a snapshot and take a photo. If you have still more questions, please don't hesitate to call him, email him, and ask for a 30-minute free session with him, right? So anyway, Jenny, Coach Jenny, if you do have any question, please take it away.
Yeah, my only question is that, so like for me, I just started this year in June. So would I be eligible for all this tax deductible and all that? And if I enroll under your service, so you can do that for me, is that right?
Yes, that's right, Jenny. That's right. So you have joined LifeVantage and you have attend regular business seminars. You have meet the test of purpose and intentions of being in a business. Therefore, you will be able to claim those deductible expenses.
Oh, perfect, perfect. Just tell me what I need to do, and I would like to avail of your service now.
Thank you very much, Jenny. Sure.
Awesome, guys. So
Thank you.
here we go. I think we ran over time, but again, in behalf of our family with LifeVantage, Kevin, thank you so much. And we really appreciate your effort and your expertise and your knowledge shared to us tonight. And we hope we could invite you one more time again, and you know, with our other distributors who haven't made it tonight. But really, so much value. And if you do have questions, again, you've heard from Kevin. His details are over here, guys. Make the most of it. You know, like leverage from the tax advantage that we have right now. We have the power of running a home-based business with low-cost investment, low running costs, low maintenance, but high earning potential with the tax advantage at the side of it. So thank you, guys. I hope you enjoyed the rest of your evening and have a good weekend. Thank you, guys.
Thank you, Coach.
Thank
Thank you,
you.
Kevin.
Bye-bye.
You're welcome, everyone. Bye-bye.